Good morning, everybody, and this is your S&P 500 day trade setups for today. So I just want to start off on the weekly, and that looks like a massive bearish bar, but it could also be an exhaustion bar. But in saying that, there's no structure to be an exhaustion bar off. So that there would be the closest area where I can see any form of structure, and then the next level is down here. Now it's important to, especially when you've got a big bearish week like that, just look at the weekly structure, because that's what you should be waiting for. And guys, don't fall into the trap that I've seen a lot of people talking about. Market crash. This is a massive crash. Market's going up. Pretty clear. You can see that's a trend line. It's up. There's no reason to panic just yet. So don't pay attention to fear mongers. Long-term portfolios, we start breaking further down. It's well worth just buying some puts for insurance. But for trading perspectives, this is an area you should be paying attention to, because it is looking very, very juicy at the moment. Remember, the Feds are busy this week, so expect more volatility. We've got a bit of a gap up at the moment, and for this trend to continue, I'm going to want to be trading off structure, and we could probably just, we're going to have to just put another level in here, because I know what's going to happen. And I'm going to just raise it up to there. Okay, so we've got a Brooks gap here, which is always a magnet. So we'll get to that structure now. Look at the oscillators below the 20, extremely oversold. So you don't want to be jumping in short here. You're looking for a pullback before you start looking for shorts. 3 hours is not going to give us much information. Clear trend to the downside. Oscillators all grouped here. No diversions or anything to worry about at the moment. So looking at the 1 hour, no diversions either, just a lower low, lower low. So what we're looking for is a couple of things. All right. So first area to be selling off is 44.39. But I would do that off the 15-minute. Now we'll get to that entry now. If that gives way, then definitely looking for another rejection up here at 44.95 or 4,500. That fails, then you're looking at this zone here, and you can see we're in a clear downtrend. So any one of these zones would attract sellers. The problem with breaking Friday's high is that we're above the daily bar on the Friday. That also validates a double bottom, and then you'd be looking for a move pretty much all the way back up to the 155 EMA, which is around 45.68. Okay, look at the oscillators, crossed over, grouping to the upside. Or it's not grouping, but pointing to the upside. So this, we could just range and then fall over and come and close a gap. And remember, those weekly gaps are important, so pay attention to it. And then we still do have a weekly level to the downside at 43.54. So this is still a pretty strong magnet. Now, if I come down to the 15-minute, the trade to the downside is messy, that's for sure. You're going to need to start dropping below the structure that has formed, which was the low of this morning so far. Put another level in here. So you're looking for a break of 44.15, and then there's a 300-point stop loss. Yeah, I'm going to take that back. I don't think it's worth actually jumping in on this, not until you get decent structure. So your risk to reward is way too high. I think the Dow Jones and the DAX has got better trades where you've got 100-point risks instead of 300-point risk. At the moment, you need to, because this is sideways, there's nothing worth trading at the moment. You need to wait for structure, and maybe a retest of this area, clear retest of 44.40. And then a move to the downside. Then it's well worth whatever structure forms there. Take the break of the structure with the stop to the upside of that structure, looking for gap close. That's the first thing. Gap close, if we breach below the low of Friday, then you're definitely looking for 43.54, 43.50 area. That is the next weekly level, so pay attention to that. So at the moment, I think we're probably going to be volatile. We're probably going to do what we did on most of Friday. You can see for most of Friday we were sideways and then just sold off going into the close. So I suspect more of the same, pretty much until we get some noise. And that noise could be earnings which are sort of astronomical over the forecast, or alternatively we get noise out of the Feds on Wednesday and that'll start moving the markets again. Anyway, that's kind of my view at the moment. I'm sitting on hands with the S&P until we see some decent structure. Don't want to try break, trading to the downside with a 300-point risk. It's just not really whetting my appetite at the moment. Anyway, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.